Hello, so we're back for part two of this video that we just started, where we're going into examples to give you some more in-depth understanding of what we were demonstrating with the last two videos, where we showed you how we're combining confluence at key levels, and now we're looking at how we use delta, and we've been looking at a lot of examples of using the delta for timing, pulling the trigger at very, very high probability, very tight stop, low risk entries with a confluence that will give us a great opportunity to make money with very little risk and much greater logical expectation of much greater reward. So let's continue with more of these delta examples. This is the one we were looking at a high, where we saw a strong reversal on a very, very strong reversal on a new high in price, with a dramatic reversal of delta on even lower volume. And we'll continue going forward in time here. Here, actually, on the same day as the last one, we see a very dramatic reversal, both in terms of what the candle's telling us and the delta, because we're going all the way from 1251 stronger to the sell side to even higher, 1347 stronger to the sell side, and then on the new low, we actually have it reversing to positive delta with a very obvious hammer, very long tail candle. And in the euro, this is an 8-minute bar here. It's very common. Even you could almost, if you're at one of those key levels, as we were just looking at, on those videos that we were just at, and let's say you're on the point of control like this, and you happen to be in a confluence with a 78% retracement, well, then, for sure, you get a pattern like this down there. You're going to jump in, even on the low bar, because while this bar is forming, maybe it's a minute before the close or 2 minutes, and you can just see you're right at the perfect level, and the sellers aren't dominating more like they were up here with 1,000, even at one tick of the, at exactly 33.48, there were 1,000 to the sell side versus only 400 buying. But it's turning around on this bar, and so another little tidbit is we can use these levels for places if you're scalping where you're obviously going to have a reaction in the market. So when you're looking at all the individual ticks of this bar forming, and you see a cluster right here at 336, that's a point where coming off the low, the buyers were getting confident enough to start loading up. There were 860 buyers on the next tick up and only 427 sellers. So at this point, the sellers had been flushed out, and you got a big volume cluster there. Just like on the way down here, you had 800 to the sell side, and they couldn't get a tick above that, and then there were even more to the sell side. So you can watch these bars as they're forming also. So this is how, as you're getting towards the turning point, you can use the market profile and the delta information to be very, very confident about what's going on at that moment, for you to get a very good time and price location for a very low risk entry. Here we're looking at an example a few days after the previous one, and once again, you have an example where actually I'm compiling, these bars are combined a little differently. If you want to, you might want to set it up this way so you can see more bars, for example, where you just take what is the overall delta of the entire bar rather than comparing, the buyers versus the sellers at every tick. You just want to see, are these all green or all red? Now, this is a very important lesson here, because doing it this way, you can see that there were actually more buyers than sellers at every tick. You might think that's what it's saying, but in fact, when you get to the actual turning point in any swing, what you usually see is an increasing in participation at a certain price, and what's really going on there is there are already orders resting and then when the new buyers put in their buy, it doesn't matter how many buyers come in. There are just more sellers all of a sudden. So the bigger money has made up its mind to jump in there and take whatever the other side has to offer. So even though all these bars are green, in fact, what's happening is probably an exchange of the whoever's willing to buy at that point with a more than abundant supply of offers that will stop the market right there. And so what you'll see is increasing delta until you get a bunching up here, and that's going to turn it. But what you had here is 900 to the buy side, and then up at the high, you were down, actually that's not quite half, you still had over 500, but the confluence of the very striking shooting star closing on the low tick made that a setup. Now once again, keep in mind, you would only want to take a setup like that if you had been looking at your the charts as we had them set up, and you had some confluence of maybe Fibonacci and high volume trading going on in the previous few hours, or maybe even from the prior day. Maybe it's a point of control or value area or whatever, or fib levels with the confluence there of prior trading. So let's look at more examples. Here's an example from a few days after the previous one that is a beautiful picture of a pattern 2. Now once again, the pattern 2 is you had a bar that was very strong to the sell side here, 1,000 more sellers than buyers, so it's a huge delta. It's also a volume peak. So the peak in volume and a huge peak in delta turns out to be suggestive of an exhaustion, but you can't really tell. It's you know, we haven't had an indication of reversal yet. For all we know, it might go dribble down another 15, 20 ticks. So on a pattern like that, you want to wait for something else to show itself. And that's where pattern number 2 comes in. When you get the exhaustion and within 2 to say 5 bars after that, you get a retest. The retest is the huge reversal in delta. And in fact, in this case, it actually made a new low by 1 tick, but it was a reversal bar by the close of the bar. So this was a very striking reversal. Clearly, there were just no more sellers. Notice that the volume was also less than half of what it is on the exhaustion bar, and the delta is a mere, 15% of what it was on the low bar. So very, very excellent low-risk entry anywhere in this bar on the retest on lower volume and greatly diminished delta. Here's an example of another pattern 1. We were looking at this earlier, but with another vantage point now, where you have diminishing volume going down to actual positive volume on the low bar and lower volume. But what this chart also exemplifies is a very common pattern in the strongly trending days on the euro, where you had a very tradable low here from 90 up to 15, but you want to now look to get on the train again when you see this continuation to the downside. And this is an excellent example of a pattern number 1 where this volume, this delta dominance by the buyers of more than 1,000 buyers versus sellers on a new high on a shooting star, where you had the delta reversing to much less than half of the prior bar, actually around 40%, and a shooting star with your high volume node down in the lower portion of the bar, meaning you would want to buy up here anywhere above that high volume node is an excellent low risk trade. If you're in here at 19, the high of this bar is at 20, so you're talking, a 3 or 4 tick stop here, and it did reverse and go down. Also, you had the bonus of more enhanced confirmation here of volume half of what it was on the high bar compared to the prior bar. So obviously there was no commitment in the marketplace to continue pushing this counter trend rally, And notice that it was also a confluence of the high volume node on the way down of this huge volume, strong volume down bar. The highest volume was right around here, and that's right about where they're stalling out. So there's an example of how these, what you call these volume delta bars, can add a little bit to the equation. If you're a trader who likes to get in on retracements, and you're looking for the continuation move in a trend, you want to get in at places in prior trading where there was a volume or consolidation or rotation, where there's likely to be a pause from all of those people having a chance to bail out. For example, if some of them were counter trend buyers there, they're very anxious to liquidate when they get back break even. So let's look at some more examples. Here's another example of a continuation setup here. This was actually a pattern 1A because we didn't make a new high on this bar, but you can see once again 482 to the buy side here and only 86 here inside bar. A lot of stalling here, and you're going back to the low of this bar that had 1800 to the sell side here. So you had that trading resistance and very strong downtrend. And also, if you have moving averages on like this, this is a very another tool of confluence where you're right up at the 50 period in between the 50 and the 23, a nice little pocket there, and that sent it down on a good trade. Actually, this was a pattern 1A, same high, all three bars, and this one was actually negative delta versus the buying, which actually was getting a little bit less on the way up here. You had 445, 531, back down to 482, and then 86 and negative here. So very good. You had plenty of time to catch that one on that 8-minute chart. And notice the low here was another, a typical strong shift where you had almost 1600. It dropped in half on the low bar and was almost nothing on this bar. And if you got in there, it went one more tick, but hopefully you don't put your stops one tick under a low in a situation like that. But still not enough, not even close to being enough to push the market any lower. You had much lower volume and obviously a very huge ratio of buyer's side on the delta. So moving forward in time, here's an excellent example of market action because this is actually a little before the Merck Open. This is Central Time, 8 o'clock Central Time, and a lot of times there will be a turn right before they open the S&Ps at 8:30. But you had volume at 642 to the delta buying. Actually, on the highest volume of the period, there might have been a report on this day, and then diminishing, not a little more than half on this new high inside bar, but then on this high, a third of what it was on the this little breakout bar here. So combining that with a shooting star, you can see now we've seen a lot of examples of these hammers and shooting stars. If they're combined with the delta, that in itself is a beautiful confluence. But if you were looking at this trade because of what you were seeing, like we saw in those two videos, that are perfect key levels of support or resistance, confluence of all the variables that we're looking at, then you had plenty of chance to get in here 4 or 5 ticks off the high on that exhaustion spike. So these kind of setups where it takes place gradually over a half hour, 40 minutes, are very easy to time because if you're watching the bar develop, you can see accumulation right here of 391, 263 dropping off, 2846, 027, and then falling down at the end of the bar. You're very confident that you've just witnessed a shift where the supply has come in and taken over any interest that the buyers might have to throw at the continuation. So it fails. Okay, so we'll stop the video there. We're out of time for YouTube. And I hope that helps with plenty of examples of what I was referring to on those earlier videos of how we go in and use the delta as we have on previous sections of the block.